Hey Julie, how are you?
I'm great, Kathy. How are you?
Good, thank you. Thanks for meeting with me.
Oh, thank you for having me back.
Yeah. With so much mixed messages and negative publicity out there with regards to mortgage rates and everything, and all the interest rates hikes we've had in the past year or so, I just thought it would be a good idea to sit down with you and just provide some comfort to our clients who have a lot of questions for us.
I absolutely agree, yes.
Yeah, so my first question, I guess, is what would you recommend to people who are struggling and have worries about their variable rates or fixed rates, and what are your recommendations with regards to that?
Sure. So if you're struggling right now to make your mortgage payments, or you're concerned with the increase in rates and an upcoming renewal, there are a few steps that clients can take to manage their situation. I would say most importantly, if somebody is struggling to make their mortgage payments right now, they really should get in touch with their lender and have a conversation. There are many things that a lender can do to try to help customers right now that are struggling. And I think it's also important for people to understand that you are not alone, that many people are feeling this right now, and the lenders are prepared to work with you. There's different things that can be done. Some lenders are assisting with deferral of mortgage payments, reducing the overall payments, increasing the amortization on the mortgage, which will reduce the payments.
Oh, yeah.
Or even in some cases temporarily suspending mortgage payments. So most importantly, get in touch with your lender. There are a few government programs that are there to assist Canadians that are struggling with making their mortgage payments, and these programs can be temporary financial assistance or loan modifications. So again, your lender can direct you towards some of these programs. Some of the other things that people can do, consider looking at your overall financial situation. Maybe a refinance could assist with consolidating some debts and improving cash flow. It also is probably a time to look at your overall budget, and maybe there's some areas where you can cut out some unnecessary expenses. Also, maybe consider increasing your income. Maybe right now is the right time to look at taking on a part-time job. Most importantly, anyone that's struggling right now needs to seek some financial advice. So if you are struggling to make your mortgage payments, it can be very helpful to speak to a mortgage professional. Get in touch with your mortgage agent or with your bank and have a discussion on developing a plan that can help you manage your finances and get things back on track.
That's all great advice, Julie. Thank you so much. So what I'm hearing then is just take action and don't delay, and contact your professional. So Julie, I have another question actually. If I have clients that are looking to purchase now, or if their mortgage is coming up for renewal, what is your recommendation?
When it comes to predicting rates, no one can, and if you could, then you'd be a billionaire. Mortgage shoppers are increasingly convinced that Bank of Canada will cut rates within a year, and that's leading most to avoid locking into a longer term, say a 4-year or a 5-year fixed. So economists share their expectation on interest rates and thought that rates would come down later this year. However, jobs data and inflation runs hotter than expected, and they've changed their predictions and are now indicating that most likely we will see decreases into 2024. What I think you have to keep in mind is that most people are getting a mortgage because there's a particular need at a particular time. They need to move, they found that dream house, they're coming up for renewal, and what they need to keep in mind is that they need to get the right advice at the right time for their situation. What I would say is that the general consensus of the market is that we are going to have higher rates for a longer period. And as a result, we're seeing more clients lean towards the 1 to 3 year fixed rates, allowing themselves to get an opportunity to get a lower rate upon maturity.
That really does make sense, Julie. And so what I'm getting from that is that it makes sense to do a shorter term renewal in the hopes that the rates will come down in the next couple of years. Is that correct?
Absolutely.
Awesome. So I understand that there's different types of variable rates out there, and I'm hearing also that there's the banks deal with them differently in some cases. So can you explain a little bit more about that?
Yeah, so you are right. Not every variable rate mortgage is the same. there's what we call a variable rate mortgage, a true variable rate mortgage, and then there's also what we call an adjustable variable rate mortgage. And yes, in Canada, we often seem to think that they're the same thing, but they do operate differently. So for example, with a variable rate mortgage, it's one where your interest rate changes as prime rate changes, and inside your mortgage payment, what happens is the distribution of principal and interest changes, but your actual payment stays the same. It does not change unless you make a change to the payment. And then on the other hand, what we have is an adjustable rate mortgage, an adjustable variable rate mortgage, where every time there's a change in prime rate, the mortgage payment is automatically adjusted for you, keeping a good balance between principal and interest. And what's interesting is we have these two different types of mortgages in Canada, or variable rate mortgages in Canada. And what's interesting is each of the banks handle them a little bit differently. So for example, with a true variable rate mortgage, your payment may not change until you hit, those common terminology that we're hearing right now, your trigger rate or your trigger point. We've also got some institutions right now, or some banks right now, that have true variable rate mortgages but are adjusting the payments slightly on behalf of their customers. And then we have other lenders or banks that have the adjustable rate mortgage, and they have been making those increases every single time that prime has gone up. So Cathy, I think the most important thing right now with the different type of variable rate mortgages, it's extremely important that a customer understands what type of variable rate mortgage they have. They should be reaching out to their mortgage agent or to their bank or lender to find out what type of variable they have and how they will be impacted if prime increases or hopefully eventually decreases.
That's a great point there, Julie, and I do suggest that any of our clients or people listening go to their bank and find out what type of mortgage they have and see if their payments will be affected with these changes. Well, thanks so much, Julie, for meeting with me and just providing a bit more clarity for people with regards to mortgages and the different types of mortgages. And if anybody has any more questions, feel free to reach out to myself or Julie or her partner Amanda at Loft, and we'd be happy to answer any other questions you have.
Thank you so much for having us. We really appreciate the opportunity.